What's up, everyone? So, GM just announced they lost $7.1 billion in a single quarter. That's billion with a B. To put that in perspective, that's enough money to buy over 200,000 brand new Corvettes. Or you could give every person in Los Angeles about $1,800. Just gone. And here's the kicker. This is one of America's biggest car companies we're talking about. The company that survived the 2008 financial crisis. The makers of the Chevy Silverado, the Corvette, the Escalade. So what the hell happened? Today we're breaking down GM's massive loss, what it means for electric vehicles, and honestly, whether your next car should even be electric. Let's dive in. Alright, let's talk numbers because they're absolutely wild. GM announced a $7.1 billion loss for Q4 2025, but here's where it gets interesting. This wasn't because people stopped buying cars, or because their factories exploded, or anything dramatic like that. $6 billion of that loss. That's GM basically admitting, hey, we bet big on electric vehicles. And we were wrong. They're scaling back EV production in a massive way. The other $1.1 billion, that's them restructuring their China operations because, surprise, surprise, the Chinese market isn't working out the way they hoped. And get this, their EV sales plummeted. We're talking a 43% drop year over year. They sold just 25,219 electric vehicles in the fourth quarter. For context, Tesla sells that many cars in like a week and a half. But wait, there's more. Ford, GM's crosstown rival, announced an even bigger write-down of $19.5 billion for similar reasons. So this isn't just a GM problem, this is an industry-wide reality check. So, what actually happened here? Why did these companies bet so hard on EVs and end up losing billions? First, the federal EV tax credits expired. That $7,500 tax credit was basically subsidizing electric car purchases, making them way more affordable for average buyers. Without it, a lot of people looked at that price tag and said, yeah, I think I'll stick with my gas-powered truck, thanks. Second, emissions regulations got relaxed. The government basically eased up on the strict requirements that were pushing automakers to go all in on electric. So suddenly, GM didn't need to invest billions into EV technology to meet government standards. Third, and this is the big one nobody wants to talk about, regular people just aren't buying EVs at the rate these companies predicted. The range anxiety is real. Charging infrastructure? Still not there in most of America. Cold weather performance? Questionable, and let's not forget, a lot of Americans just love their gas-powered trucks and SUVs. GM looked at government mandates, looked at Tesla's success and thought, we need to build a ton of EV factories and develop all this technology right now. They spent billions on the Ultium battery platform, on the GMC Hummer EV, on the Cadillac Lyriq, on retooling factories, and then the market basically said, meh, not ready yet. Now let's talk about that $1.1 billion loss in China because that's a whole other story. For years, China was supposed to be the golden market for American automakers. 1 billion people, growing middle class, love for cars. What could go wrong? Everything, apparently. Chinese domestic brands like BYD, NIO, and XPeng have absolutely dominated the EV market there. They're making electric cars that are cheaper, feature-packed, and honestly, pretty impressive. Meanwhile, GM is trying to sell Buicks in a market that's moved on. The Chinese government also heavily favors domestic brands with subsidies and incentives, so GM is competing with one hand tied behind their back while their Chinese rivals are sprinting ahead. The result? GM is restructuring, which is corporate speak for we're cutting our losses and getting out of Dodge. That $1.1 billion is basically them admitting defeat in the world's largest car market. So what does this mean for regular people like you and me who just want a reliable car? First, don't expect EV prices to drop dramatically anytime soon. These companies are trying to recoup billions in losses, not race to the bottom on pricing. Second, we're probably going to see a lot more hybrid vehicles. Think Toyota's strategy, give people the efficiency benefits without the range anxiety. GM and Ford are both pivoting hard toward hybrids now. Third, if you were waiting for that promised $25,000 electric car from a major American manufacturer, keep waiting. Those ambitious plans are getting pushed back or canceled entirely. But here's the thing, this doesn't mean EVs are dead. It means the timeline was unrealistic. We're still heading toward an electric future, just not as fast as companies like GM predicted. The infrastructure needs to catch up, battery technology needs to improve, and honestly, consumer attitudes need to shift. Look, GM isn't going bankrupt. They're still making money hand over fist on their gas-powered trucks and SUVs. The Silverado basically prints money, but this $7.1 billion loss is a wake-up call for the entire industry. The EV revolution is happening, but it's going to be more of a slow evolution than the overnight transformation everyone predicted. And maybe that's okay. Maybe we need the charging infrastructure to catch up. Maybe we need better battery technology. Maybe we need EVs that actually meet the needs of regular Americans, not just tech enthusiasts in California. So here's my question for you, and I really want to hear your thoughts in the comments. Would you buy an electric vehicle right now with current technology and infrastructure? Or are you waiting for something specific to change first? Drop your answer in the comments below. Tell me what would convince you to go electric, or if you've already made the switch. How's it been? If you found this breakdown helpful, smash that like button and subscribe for more automotive industry deep dives. I'll see you in the next one.